We're at day 15 and we're averaging over 1% a day. At this point, we're up 20%. And I've given every trade on my social media platforms. So head to X, head to Instagram. You should not be missing out on these profits. I'm absolutely handing you guys silver platter trades. And we even closed BA on Monday, luckily for a $300 gain. That was incredible. And we switched our capital to a different trade I'm going to talk about today, but I'm also going to go in depth on why I didn't like BA and why it was going to be a longer road to profit. I'll talk about that at the end of the video. But today I have something special for you. I want to teach you how to manage your leaps like a champ with an actual system. But here are the leaps, just so you know. Here are the 4 leaps. They're all profitable. At this point, all of them had hit 50%, and the newest one, Airbnb, we'll talk about today. But we are absolutely cranking. To have 50% winners, 3 of them like this so quickly, it's incredible. But you are chasing if you're over 30%. So if you're trying to enter my past leaps, you're kind of chasing a lot of these plays, so be careful. I'm going to try to put out new trades as much as I can so that everybody who joins and gets a fresh look at me and pops on this YouTube channel, joins the challenge, can have an opportunity to win with us. Even though we've called out a bunch of profitable past trades, I don't consider this a win until everybody wins, even the new people who are just joining now. So if you're curious about what happens when you're in the leap, when you get out of the leap, you do need to understand my entry-exit mechanism and my management system, because I don't want you being confused on what happens. When you're in the leap, you are not taking a stop loss. And I've made this mistake so many times over and over and over again. I'll show you one of my trades was SoFi. And I will hate myself for this every time I look at the chart. But I bought SoFi leaps right here live on YouTube. And I stopped out myself at the bottom because I was on vacation. I just couldn't manage to stomach this and watch it for the next 2 weeks of vacation. So I said, enough's enough. I just want to enjoy vacation. And then boom, I missed out on over 500% gains. And that's given my early entry. So if I entered at the bottom, that would have been 1,000% gains. So that's why we don't take stop losses. The gift of the leap is the time. You have so much time. So don't take a stop loss when you have so much time left on it. The gift is the time. So if you have time, let it be your gift to keep holding. The only time I'll take a loss moving forward on a leap option is if 4 months in, if I've held for 4 months and I'm down 50% or more, that's a bad sign. Why is that a bad sign? Basically, again, here's your leap. Here's 12 months. You're down 50% here. That's fine. You have so much time to make money, and it could do this slingshot like SoFi where you make 1,000% or more. But once we get to around the halfway point, even like the third waypoint, and you're down 50%, what do you have? You have less time. You have less opportunity. You have less runway. Because once it starts running, you still want 2-3 months to hold it. You want to maximize that upside. So even if you had 6 months to go, 8 months to go, it's getting dangerous. And once it hits 6 months, or even let's say 7 months, 8 months of holding that leap, that is a high risk trade, a gamble at that point. Anything less than 90 days out is a gamble. So you got to be very careful gambling your money. The whole idea of this challenge is to teach you how to have success, how to grow your account with low risk and push up your returns of what a good market could do. So that's why we don't take stop losses until 4 months in, 50% down. Now you're probably wondering, when do I take a lot or when do I take a profit, Matt? What's the game plan? You have a bunch of trades, Matt, that are super profitable that you've given us. We appreciate it. But what do we do once they hit? Do I take it now? No, don't take the profit now. Never, ever, 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 ever take a profit under 100%. That is the worst decision you can make, especially if you have time. Again, the gift is the time. This is your runway for the plane to just go absolutely to the moon. So if you're up 100% in the first week, let your time push this up to the moon. And how do we do this safely? We take off half at 100, only half at 100. You can even take off a third. I don't care. But the point is, let runners hang out in your portfolio. Let this thing run for another 6 months with the runners. So basically what this looks like is, let's say you have $5,000 in the trade. Like I've been doing with you guys, I put $5,000 in initially on some trades, maybe 10. But let's say I put in $5,000 and the trade doubles, it goes to 10. Here's what you do. You sell half, which means 5K is back in the bank. And then 5K is a runner. What happened in the past is we gave out this trade to what we call our like leap trading students. We're trying to build out a leap coaching program, but we gave out ETHU, the Ethereum ETF down here. This ran 100% in a week. 1 week, it's 100% up. And guess what? Next week, about 8 weeks later, you won't even guess the return at this point. 800%. 800%. It was actually a shorter term option, I believe. But the point is that the runners can run farther than you ever thought was possible. And if you sell before, you sell everything, you sell too early, you miss out on the whole point of the leap. The leap is just literally to get something to run passively and just crank. So the beauty of what I'm teaching you is you get your initial capital out. Once you make 100%, your initial money's out. You're back to cash. And then that 5K, let's say it makes 800%, or let's say it makes 1,000. That 5K could go up another 25K. So we're talking just mind-blowing numbers compared to your initial portfolio value. We're talking a portfolio going from 5K to 30. I mean, it doesn't make sense mentally, but it can happen. You have to let it happen. So the point is, when you have that cash freed up, you find the next trade. It's a free push to another trade. So that's what I'm going to be doing in this challenge, is hitting 100%, selling half, finding another trade. It's hard to find great trades over and over again. That's the tough part. That's why we don't sell our runners. Finding a good trade is the tough part. Once it's good, once it's validated that it's a good trade, let it rip. Let it rip, because finding another trade that can have momentum, can keep ripping, is a much taller task. So once the 5K is available, boom, I'm going to help you guys find another trade. That's how we keep this challenge going. That's how I help everybody brand new keep cranking with us. So now let me go over the BA play. And honestly, I caught this perfectly because BA ripped today. And I had some students send me, multiple students send me a news article. Basically, there were negotiations this week on tariffs related to Boeing. You know, they wanted to push orders, like 250 orders in foreign countries, and Trump is trying to push the tariffs to favor Boeing, to have Boeing get more international exposure and orders. And so I felt like even though the chart was perfect, the downside's perfect, there's some short-term stuff that made me feel like this could be a pain in the butt for us to watch, to manage. And so I exited on that down day, made a lot of good money for that small position. And honestly, it was a really good move because we popped up higher today. So the only downside of playing singular stocks, like stocks that are just not ETFs but related to one company, is there's news, there's tariffs, there's a lot of crazy stuff that push the stock randomly. Like Amazon, I'm looking at today's down a lot. I mean, it could be as small as like Jeff Bezos is just cranking his sell orders. So it's kind of dumb, the stuff that can move a singular stock, but it could also move it in our favor. So we can't really be sweating that because it's a two-edged sword to help and hurt us. So BA, yeah, didn't like the news coming up this week, and then Wednesday's the final day to negotiate the Boeing plane tariffs and whatever. So I'm out. And Airbnb, I'm going to talk about why I entered Airbnb. Airbnb is like my true love, my one love in the markets. Airbnb is, in my mind, a monopoly. Like if you want to go stay somewhere and you want a unique experience, you don't want to be in a hotel, you want room for your family, Airbnb is where you go. There's nowhere else to go. If you want to list your own house, if you want to create a business of renting out places in awesome places in awesome countries, you do it on Airbnb. VRBO does not have as much business. It's like Lyft versus Uber. Uber is the bigger behemoth. Airbnb is the bigger behemoth here. So I'm fine if there's even a duopoly setup, but in my mind, it's a monopoly. Airbnb takes everything when it comes to a certain niche experience. You want to be somewhere, big house, kind of be remote, who knows? There's not many other ways to get that. And this allows other people to create businesses, make money. So there's so much demand on both sides. People want to list stuff, people want to stay. They've created the marketplace. At this point, the stock is just not loved. And it's been unloved forever. So this consolidation phase is ridiculous, just straight up ridiculous. And when I say ridiculous, I mean awesome. It's because a stock that's this amazing and that's traded sideways for this long, remember this is the IPO low. We are literally at the IPO low, 4 years later? The whole market's been going higher and higher and higher. And this one stock is just chilling. This is a compression. Basically, a new stock comes in the market. The insiders sell. They suppress the stock for maybe even this long. But what also happens is the valuation needs to be kind of intersected. So the numbers are off from where investors want to be. And when that intersection happens and it's created like a fair price, it explores price higher for the first time ever. And a stock that's been consolidated this long, when it starts finding new price levels, we're talking about 100% moves. This stock could be at $500, $300. Not even flinching at those numbers. I think it's very possible. And what happened over the past with Airbnb is we went from like $3 billion all the way up to 11. Insane growth. Market doesn't care. So again, it became a more efficient stock in that time. It became more profitable. We started actually making money instead of losing money. So we're increasing margins and revenue, and the stock price doesn't care. So at some point, they're going to care. And if they were valuing this company, let's say 4 years ago, it was a 77 billion market cap. If they were valuing this at a 3 billion revenue, 77 billion, the first day it IPO'd, revenue to market cap, that's like a 20x. So now let's do that same multiple now. Let's say people get ridiculous. They value this at a stupid level again. We're talking 10 billion revenue, 20x that's 200 billion for the market cap. That means the stock could triple in price. We're talking about a $500 priced Airbnb stock. That's kind of why I think this is exciting. I will buy Airbnb leaps every 3 months if I can. And this is my favorite stock in history. So that's why I picked it. I'm always biased to buying Airbnb, if I'm being honest. Going over the next plays, let me just go over what else I got cooking for you guys. Qualcomm, touching 50% gains. The market's looking a little toasted here, so I'm not sure we hit our resistance level easily, but 175 is where I'm going to start selling and shaving, and we'll kind of see if that hits. Same thing. Market's looking weak. We're kind of falling. Grab almost pushed today. Couldn't do it. But we have a good couple days in the market. I think a lot of these plays hit 100% soon. So around $7, I'm going to sell Grab for 100%. sell half, take half, go find new plays for everybody. The other play, Uber. Uber absolutely soared on Monday. That was like a 30% gain just in one day on leaps. And then today we're flat, kind of understandable. But this stock has compressed price for 4 months. And so I'm looking for this breakout to hold and push us to 120. Again, if we're talking about price compression, this is sideways for 6 weeks. Airbnb's been sideways for 4 years. Like, I love playing breakout consolidation patterns. I couldn't be more pumped on Airbnb. So Uber, short-term potential, like short-term consolidation. And now we're moving. That's exciting, but man, Airbnb is exciting to the max. So as you know, we are doing a fundraiser, Feeding America, in the description. If you want to donate, if you've made money, what I'll be doing is showing you guys the donators every stream. And we have new donations for the first time. I love it. We got Scott, brand new donation. He's in our coaching program and he's in our boost trading program. And he's up 6 figures since joining. And he's supporting Feeding America. So thank you, Scott. We're trying to make a big change for traders first and then help traders make a big change for the world. So we're trying to help feed everybody. Kent and Andy, both $100. Very grateful that we can make an impact together, everybody. So thank you so much. I'll link a video to the right of me on my 3 option trades from the past Saturday. Check that out. See if there's any trades you like. But if you want my trades, you want to see what my money's in, be sure to watch the Leap updates. Peace, everybody.